Welcome to Hilary Topper On Air, the podcast you can't afford to miss.
COVID-19 has dramatically changed the business landscape. Small and mid-sized businesses are taking a major hit every single day, and many fear that they may not fully recover once this pandemic ends. I'm Hilary Topper, and this is Hilary Topper On Air. Today, I'm really excited to be speaking with an old friend, Brett Hickey. He is the founder and CEO of Star Mountain Capital. They specialize in asset management and exclusively focus on investing in established U.S.-based small and mid-sized businesses. So, Brett, welcome to the show.
Thanks, Hilary. Great to reconnect.
So we've known each other for a long time now through the Entrepreneurs Organization. Could you tell my listeners a little bit about yourself and your background?
Sure. Yeah, yes, I was trying to think back to when we met. It's got to be probably around 13 years ago now. And I guess as part of me, my parents were both teachers, and so I've always had a thirst for learning and knowledge and remain quite involved in academia, including sitting on the global board of Harvard's Alumni Entrepreneurs Organization, and also being involved to some capacity with my undergraduate school with McGill University from Canada, where I grew up. And I guess some maybe fun little trivia facts. I grew up in northwestern Canada, a small town of 10,000 people, and maybe that's what draws me to liking small businesses, which is the sense of community and how people work together and rally together. And in times like these that are trying, it's particularly important and really nice to see a lot of people rallying together, especially all the volunteers and healthcare providers and delivery people and so forth, to really keep society and humanity going together. I moved to New York roughly 20 years ago, initially to work in investment banking for Solomon Smith Barney at the time, which then became part of Citigroup. And then I launched my first asset management firm in the early 2000s, focused on investing debt and equity capital into established smaller US businesses. Later founded Star Mountain Capital as a version 2.0, really taking advantage of capital I had been fortunate enough to amass to open an office in India and invest pretty heavily in technology to take a more data-driven approach to finding and investing in high-quality, established smaller businesses across the U.S. And on a personal note, I have 2 young kids, and as we were talking about before, there never seems to be enough hours or minutes in the day, but enjoy life and feel very blessed and thankful that my family and business are in good shape in these trying times.
And they are beautiful kids. I've seen them on Facebook and Instagram.
Well, thanks to my wife for that, thankfully.
So talk to me a little bit about Star Mountain Capital. How long have you been around? What recognitions have you received? And how do you support your team promote a positive culture, especially what's going on now?
Yeah, good question. The culture is one of the things that I've always been a believer in culture, and it might come back to, again, that small city mentality and working as a community and borrowing each other's snow blowers and lawnmowers and things of that nature, and really working together and collaborating, because that's how you make a village work. When I worked in investment banking, I really loved all the structuring and the analytics, and Star Mountain is sort of a hybrid of that, very analytical, very data-driven, but also very community and corporate culture-centric. Over the past year, we won 2 different awards by Cranes, again, for best places to work in New York City, as well as by Pension and Investments to best places to work in the asset management industry. And we're thankful for that as some examples of the output of investing heavily in culture. We're a 100% employee-owned business. We have over 30 full-time people and over 30 operating partners. We have offices across the country helping find and engage with and strategically help grow smaller businesses as an investor with them. And one of the other things we're very proud of is the partnership type of mentality we take to our business, where 100% of our employees are shareholders participating in the carried interest, or in layman terms, the profits of our investing. And it was interesting.
Wow.
When I usually would be walking home from the train, I typically listen to a podcast for the 10-minute walk, and have been listening to Steve Schwarzman's most recent one from Blackstone. And he was talking about how they have such a tremendous application rate that even exceeds applicants at Harvard and things of that nature. We recently, I felt quite proud of this. We are obviously a micro business relative to Blackstone in any measure, but it was interesting. We recently put a posting up for an associate, and we had approximately 2,400 applicants for that one job. And that really is just something that made me feel very proud, and all the work and effort we put behind our culture to create a place to really attract, retain, and motivate high quality, long-term oriented talent.
Very, very cool. So with this COVID-19 pandemic, it's negatively affecting all of us, but especially small and mid-sized businesses. Can you talk a little bit about what you're seeing and predictions for what's to come?
I'd be happy to, and for more infographic-driven data, you're welcome to share our YouTube channel, which is Star Mountain Capital, where we are currently every 2 weeks doing a data-driven approach with my partner, our risk officer, Dr. Lev Bordovsky, that writes a piece called The Daily Shot for the Wall Street Journal, and he is the former global head of risk for Credit Suisse's alternative business, which was about a $100 billion asset management business, and then he was the founding chief risk officer of GSO Blackstone, one of the largest credit investing businesses ever built. And so the macro insights we try to really take globally and then dissect and bring them down into the US lower middle market, as we call it in the investment space, which is really small and medium-sized established companies. So from a COVID-19 impact, first of all, it's a pandemic that is hitting everything and everyone, and is unfortunately quite far-reaching. Thankfully, the US government is very aggressively dialing up efforts. They had their $2 trillion stimulus package. Today, on the 9th, they just released another major stimulus package, recognizing that approximately 50% of all employees in the United States work for small businesses, and that the government really needs to work to help to support them. And so I think it's really great to see banks and other people mobilizing to try to help companies. Ultimately, there will be many companies that go bankrupt. The companies that systematically will be able to survive are generally companies that, one, have strong balance sheets and current liquidity to be able to withstand dramatic losses in revenue. Two, businesses that have cost infrastructures that will allow them to reduce expenses. And relating to that, that's businesses that are, have good relationships with vendors, and they can try to stretch out payments and really preserve that liquidity. Companies that might have strategic investment partners like Star Mountain Capital that can help financially support them. And those ultimately will be the type of companies that will be able to survive this, including ones that will be able to benefit from the PPP stimulus plan and other capital from the government. But it really comes down to liquidity and being able to manage through what will likely be an extraordinarily difficult second quarter, where based on the current death rate projections in the United States of COVID-19, we don't foresee people getting comfortable to getting back to work, even really starting to do that, for at least another 2 months. So we would generally view, which this is consistent with BCG and others' research reports, that it's really somewhere between mid-June to perhaps late July until people start to increase their comfort. Beyond that, then we believe we will see a good recovery not a snapback, but an escalating, an exponentially increasing recovery through the second half of the year, and still recovery going on into next year. The U.S. tends to be quite resilient and very innovative and entrepreneurial, which is one of the things that I really love about this country. And I think that you will see tremendous increase in testing capabilities, the current potential and hopes for vaccinations are really moving rapidly. And I do think that comfort will be built, and ultimately the global economy will be a shrunk one, will be slower growth. And the GDP estimates for the US for 2020 for the year are around 2.4% negative, that the economy for the entire year will contract. And thankfully, globally, the US is much less dependent on exports compared to other countries. And the US consumer and the banking sector is in dramatically better shape than most other countries, as well as compared to the last recession. So that should help a lot as the US gets back into recovery, but it will take time to recover, and it will, we don't believe, recover back to what we saw early this year. It will be recovered back to a new lower normal.
So many of the businesses are looking for investors like Star Mountain Capital. What are some examples of compelling types of established private businesses that you would like to invest in?
A great question, Hilary. We first off, I'll start with some sectors we don't invest in. We stay away from highly cyclical sectors. Our data-driven approach to investing really focuses on businesses that have positive trends behind them and positive macroeconomic tailwinds, sectors such as healthcare, education, technology, business services, and avoiding other sectors such as oil and gas, real estate, commodities, consumer retail. We are not specialists in those sectors, and so we do not invest in them, generally speaking. And so we like a lot of companies. We like a lot of type of businesses. We look at about 1,000 private businesses a year, and we tend to invest in around 20 of them. And we also, to further gain data and insights, as well as to strategically invest in additional lower middle market companies in the US, we also have a secondary fund business where we will invest in other funds and purchase stakes in other funds that are in turn invested into other private, small, medium-sized businesses in the US. So our aggregate portfolio today is over 300 private businesses.
Wow.
So it's a pretty comprehensive portfolio. And those are some of the industries. So for example, right now, as you can imagine, we love one of our video conferencing portfolio companies. Our telehealth business is doing great. There are a lot of opportunities that come out of challenges, including businesses that are able to withstand the challenges and have the liquidity and have strategic partners like Star Mountain that can then grow, acquire competitors that are in challenged positions when the economy recovers, pick up additional market shares. So what we like to try to tell people is you've got to be able to survive first, but then if you can survive and do a good job, coming out of recessions creates tremendous opportunities on average for both business owners and investors.
So I know that Star Mountain does add value to strategic investors and lenders. Can you speak about some of your team's experience in doing this?
Yeah, good question, Hilary. We try to refer to ourselves for one of the divisions of our business being a value-added lender. Mm-hmm. We don't try to be all things to all people. We really try to focus on finding high-quality management teams, high-quality business models, and really putting our capital, our time, relationships, and resources behind them to grow them. Some of the strategic things that we do that have the most systematic benefits to businesses include acquisitions. So we'll help businesses find acquisitions, companies that they can buy. We'll help them analyze them, negotiate them, structure the acquisition. We'll help them finance that acquisition. We'll help them integrate it from a technology, HR perspective. And then we assist them in what we call getting middle market ready. Basically, how do you take your business from typically under 10 million of annual EBITDA, or generally somewhere between, let's say, 10 and 150 million of annual revenue? How do you take that business to become a bigger, more institutionalized, more professionalized business that can ultimately sell at a higher valuation? So things like building your board of directors, building a stronger board, thinking about what are your key outputs for dashboards so that somebody that buys you sees that they have transparency and clarity in how your business operates and runs, making sure that your customer base is well diversified. Things of that nature are often where we're adding a lot of value, including assisting in further building up management teams, often having stronger CFOs. Perhaps if you founded your business and your goal is to step away eventually when you sell it, well, that means that you need to be bringing in and training a strong chief operating officer or president of your business, would be other examples.
So I know that you also have a secondary fund. Can you describe this business further and why today seems to be a compelling time to make these types of secondary investments?
Yes, the secondary business it's a really interesting business. When you're in the private market space and you invest in a private equity fund, or you invest in a private credit fund, and you say, I would like early liquidity on my investment. Well, how do you get that early liquidity in a private fund investment you made, or in a private company investment you made? And the reality is it's a very illiquid market, but it is a huge market and highly fragmented. There are about 200,000 private businesses in the United States alone that have between 10 million and 100 million of annual revenue. And there are, excluding venture capital funds, there are approximately 500 funds within the lower middle market. So it's a really big, really fragmented market. And you have a lot of different people for their own reasons, estate planning, needs of liquidity, strategy shifts that say, hey, I would like to sell certain assets to get some liquidity for whatever things they may want it for. So our secondary business means that we're purchasing those interests on a quote unquote secondary basis, meaning somebody else was the primary owner, and we're now going to be the second person that owns the interest. That's where the word secondary comes from. And that's where we're buying assets and evaluating assets in other private equity and private debt loans that other people made in businesses as well as funds. In an economy like this, where stock markets have dropped and people's liquidity and cash flows are a lot lower than they were, people tend to have a higher need and desire to liquidate various investments of theirs and gain additional liquidity, which makes it on average a more compelling time to be able to find good valuations.
Interesting. And the last question I have for you, I saw that you have a charitable foundation which supports women, vets, and health. Can you just tell us a little bit about that?
Sure. I guess as with a lot of charitable things, I'm sure it's been something that's touched all of us. In my case, my mother died of cancer when I was 6 years old, and then her sister, my aunt, really became like a mother, and unfortunately, she ended up passing away of cancer, thankfully, many years later. So one of the things we support is cancer research with the Star Mountain Charitable Foundation. We also support women in the workplace, and we support veterans and athletes as well. And on the athletic front, I used to speed skate on the national training team in Canada while I was going to college. And one of the things that's very difficult for athletes as it is for veterans. There's, of course, a lot more empathy for a veteran that served our country, of course. But even for athletes, it's very difficult to transition into building a career. And in speed skating, the one thing I always thought was a blessing is it was quite clear that there's no financial money behind it. Whereas I have friends in hockey and other things like that that might really put all their eggs in one basket. Thankfully, I always was pursuing education and some other type of career alongside that. But a lot of athletes don't do that. And so different friends of mine, like Sasha Cohen, who was an Olympic silver medalist, figure skater in the Olympics in Italy, for example, and others, we try to help educate and help connect veterans, women, former athletes with business owners, in particular small businesses, to help them learn about jobs and create careers as one key driver of how we try to assist.
Awesome. That's awesome. So tell us, lastly, how could somebody get in touch with you and learn more about Star Mountain Capital?
Probably the best ways are, one, through our website. You can send an email to info@starmountaincapital.com, and you can learn more about what we do at starmountaincapital.com. As far as data and information, which we provide a lot of free content and both podcasts and webinars on the economy, on the virus, and whatever topical things, YouTube is probably the best channel for that, and that's youtube.com/C/Star Mountain Capital, or if you just type Star Mountain Capital into YouTube, you can get there. And then our LinkedIn page has a lot of good content as well, as far as information for people that want to learn about anything in and around the private investment market. And we try to be as helpful as we can to as many people as possible. So please do feel free to reach out. The more concise and to the point things are, the easier it is for us to help, because even if it's something we can't directly help with, we really try hard to refer people to other folks that can be helpful.
This was a great show, Brett. Thank you so much for being on it. I also want to thank our sponsors, the Russo Law Group. They're a leading elder law, estate planning, and special needs law firm. The Profit Express, which is another awesome business podcast, and Fortunoff Fine Jewelry. You could check them out. They've got amazing stuff, amazing jewelry on fortunoffjewelry.com. And lastly, I want to thank you, our listeners, for tuning in. If you want more information on this show or any other show, visit our website at hilarytopperonair.com, where you can find us on Spotify, iTunes, Google Play, SoundCloud, and even Amazon Alexa. Have a great week, and we'll see you next time.
Thanks, Hilary.